What's up, guys? Back with another video. Following the weekly bias video that I just posted. Now we're gonna go over daily bias. So what I use daily bias for is to determine the draw on liquidity. It has to be high probability and make sense in the overall market direction and also in the overall narrative of where we are in the week and what we've done in the past sessions. So I trade New York. I would also look at the past sessions like London and Asia, and also if it's Monday, like what we'll be doing right now, and also do Monday, Tuesday, and explain like briefly Wednesday, Thursday, and then the rest of the week. But the reason why I want to do Monday is because, well, we have it's the first day of the week, so we have to deal with the new weekly opening gap that I'll be explaining with you to you guys. So yeah, for daily bias, we're literally just looking for the draw on liquidity. We want to take trades with the daily bias, so keep that in mind. If you don't have a draw on liquidity, then there should be no setups that should be taken. So straight away, we have Friday from the last week. So we'll go by the 5-minute time frame. So this is where we closed off last week. Let's play it forward here. So this is the new weekly opening gap, guys. This little gap here. I want to see how we react to it and how we essentially form structure under it and in P areas under it, and in P areas that I marked out for the weekly bias, right? So just to go over the weekly bias, just in case you didn't watch the weekly bias video, I'm expecting price to obviously come higher since we're in a overall uptrend, as you can see. And we do have highs here from last week and highs here, all-time highs. This is a wick consequent encroachment. Let me mark that out for you guys. And I think it's a daily. Yep. So I'll put a D for daily. And now let's play it forward. And I'll tell you guys, I'll like narrate to you guys what happened during the London session. So it is not yet the London session. Right now it is 7:20. Let's play it forward here. It's about 12:40. So the London session just started. There we go. London session, we trade down, as you can see, right at 3. Get a swing up, taking out highs here, and then down into this 4-hour fair value gap. And we're in this, guys, remember, we're still in this overall. I don't want to go to the daily because then it'll formulate it'll create the whole daily candlestick. So I don't want to like give it away. But yeah, so we're in this daily order block here. It's just a down move. It's just a daily down move on the daily time frame. And that's what this is. This is the high of it, of the body, and the mean threshold of the whole candlestick. So let's see what happens here. So we traded lower, displaced lower. And right now it is 5. So it's the end of my London session that if I were to trade London session, I'd be done. So let's continue forward. And as you can see, we're holding, what is this? Daily wick consequent encroachment. So we're holding the daily wick consequent encroachment. We're under. We had a gap under. So the new weekly opening gap was formulated under the previous close of last week on Friday, which kind of gives me a bullish bias since you don't expect price to go to where the overall move is going to be right away, especially as you can see, we had a massive move down in London. So we could expect possibly to form a low of day here, especially because we're in a discount PDRA, and in a discount larger PDRA too. It's just a bunch of things coming together. We're also holding this daily wick consequent encroachment. I know it's a lot for you guys, but just follow along. I'm gonna try and go as slow as possible and explain it in depth as possible. But yeah, like I said, it's my first time doing this sort of academy, sort of this course, I guess. So my teaching might not be there yet, but I'll do my best. So yeah, we came below the new weekly opening gap. Basically, we opened below the last week's close, which gives me a bullish bias to Monday. And obviously, we are in a uptrend, like I mentioned before. And what you usually will see in a candlestick is a move lower and then a move higher. And then obviously a little bit move lower to close the day. So that's what we see here. We see a move lower and we see a absolutely strong move lower right here during the London session to potentially fake out people and also create the low here at what? A PD array here and a larger daily PD array. And at this daily wick, you can see it's holding clearly. Do we have, so yeah, so for targets right now, we have the new weekly opening gap. I'm gonna mark that out. So let's put that in purple. That's what I usually do. So we put it at Friday's close, which is the high, because it's a green candlestick, so it's at the high of the body, and at the open of Sunday's open, which is right there, the low of the body of the green candlestick. If it was a black candlestick, it would be, like say it was, if it was this candlestick, it would be at the high of the body. Now let's put the constant encroachment for that. Now this is kind of like some like replay price action, so you guys will now see how the price plays off of the PD rays that I mark out. So that's gonna be pretty cool. So yeah, so right now it's 7:05. Okay, I replayed it a bit quick there. All right, but here at 9:25 we had a massive jump, and at the open, well, we got that jump right to the high, taking out that liquidity and all this liquidity here, not this but this, and then a massive move lower. And well, what you could expect is I'm actually now going to go down to the 1 minute, but right away what I look for right when market opens is the liquidity looking back till 7 o'clock, 7 a.m., right? So if I look back to 7 a.m., we'll mark that out, but I'll get rid of it because we don't really need it. It's not very important. Like, it's just going to mess you guys up. So I'll just mark it out. So 7 o'clock right here, look in this area from 9:30 to 7. What liquidity do you guys see? I see this low right here. And let's move this. So this and this equal lows. Okay, let's mark that out. And I'll be going over potential setups now on the 1 minute that have potentially formed. I already see one right here. So right now on Mondays, if you're bullish for the week, you could take shorts. You could be open to shorts, but for Tuesday, I would start to stop looking for shorts unless we invalidated a bullish PD array, and then it's clear that we're gonna target like some sort of low. Then yeah, then we can still take shorts. But if we're still holding bullish structure, then shorts on Tuesday and Wednesday are pretty much cut off. I'm probably not gonna take shorts on those days. Wednesday could be a pullback day, and so if we're bullish overall and we just went up this week and Thursday comes by, then it's possible you could take a short. If you see a high probability trade, then go right ahead. And Friday could be depending on what Thursday did, if it took off the overall weekly target, then Thursday could be also a trade back into the range of the weekly range. So we went higher. You could expect Friday to come back down into the range, so trade lower into some sort of PD rate or some sell side from the previous day. It could be either session or daily sell side. Yeah, so I basically just gave you guys a whole narrative standpoint of how each day could play out if we're in a bullish overall trend on a higher time frame. So definitely write that down in your notes. And here, let me just explain this to you guys right away. So right away we had a push higher for this sell side, buy side right here. So I'll mark that out, buy side. And we also have a imbalance here for sure on a higher time frame. So if you're going like a 5 minute, or I think it was a 15 minute super clean, yep, right there. So I want to see if we could target that. It doesn't have to be in the morning, it could be in the afternoon. So definitely like keep this in mind. But yeah, like on the weekly bias, we have these PD rays that I marked out. Still holding. Look, as you can see, we closed below the high here, so it's kind of like okay, let me potentially go short here. So there is a short play here that you could have targeted the 7 a.m. lows. So you could have taken something like this, change in state right here, wicked it, boom, came back below the lows, which is pretty nice. You don't have to, but there we go. Enter in the fair value gap, stop at the high, and well, your last target could target that. I would look to leave a runner for this right away. I would probably put one for the new weekly opening gap, consequent encroachment, and then the rest, the second take profit, I would probably leave for the weekly order block right here, as acting as a discount PD array, and also we have this under it, so it's pretty high probability, this volume imbalance. And I would leave a runner for this to get an overall 5.32 RR. So yeah, going into the rest of the day, I would be paying attention to, yep, this high here, imbalance. So just watch out for that. We rebalanced to the high of this, and ultimately came down, switched down to just take out these lows. Looks like we're already rejecting that, so it looks like we could go higher. I'm not really expecting us to hold this as resistance, but we'll see what happens there. And yeah, I'd be pretty much done for the morning there, since there was a profitable trade, so I would probably be done for the morning. I would take out highs there. But if there's also another trade that formulates and to look to target this volume bounce right here, this fair value gap, then yeah, you could possibly take that too. But maybe go lower on the risk if you guys want to save capital. So let's play it here. And right away, when you see this holding the bodies, you shouldn't expect us to just break through it. Oh, and also look at daily with consequent encroachment right there, held quite nicely. Came back to the high of the new weekly opening gap. And right now, I really don't see anything in here that would be super high probability. There's a low probability trade here you could have taken, but I wouldn't have taken it. It would have played out pretty nicely, but I wouldn't have taken it, and I wouldn't suggest that you guys do. So don't pay attention to this too much. It was a change in state right there, fair value up, but don't, yeah, it's low probability, so don't pay attention to it too much, because we already took out high. So I want to see us take like some sort of like 5-minute fair value up. So like this one right here, come above it, came back down into it. So let's see if we can hold it as support, maybe come into this one here, come a bit deeper. And right now it's 10:35 to it's 10:40. So let's see if we can maybe come a bit lower, or there we go, became lower. Bodies are holding. These are little like algorithmic hints that we're gonna go higher. So we end up consolidating a little bit. See, I don't think I could go. Can I go on? Okay, okay. So right here, SMT. You can mark that out. We haven't gone over SMT yet, but I guess we'll see that in the future videos. It's just this is a bullish SMT, so right when you see this divergence, you'd expect some sort of bullish price action, but of course you need to wait for more confirmation. So we got the change in state, but still nothing like super high probability. We are in a macro hour. Yeah, we just consolidated, so like I said, nothing here is very nice. We did come down, touch it a couple of times. As you can see, bodies are holding here, wicks holding, didn't come down to it quite. But this, we came down here again holding, so it's like nothing here to take. Again, now it's the lunch hour. So right when 11 o'clock hits, or 11:10, then I'm like, okay, game, I'm gonna stop, go eat something, work out potentially, and come back to the charts, right? So let's look now. It is, we'll skip to 130 because that's when I look to start trading again. So we'll do that right now. I'm gonna explain what I see. What I see right now with the lunch hour. But first, we'll do a little breakdown. So yeah, we still have this fair value gap here that's left open. So keep that in mind. We didn't touch yet, but I really want to target this high here. That's the low of the fair value gap. That's what I want to target. That's like a super high probability target. What's also a high probability target is the consequent encroachment of it. So around this area, so 21,564 around there. It's pretty high probability. As you see, during the morning session, we came up, took out the high, and we still made higher highs here. So that's a bullish sign. Came down here, still liquidity, and higher highs, like I just said. Filled in imbalance, higher high right here, imbalance right here. Let's see if we can make that higher high. So let's mark that out. So going into the afternoon session, I'd like to see if this could hold. We also have this order block here, so it's okay if price comes down a little bit. So I'll make this a line OBMT, and I'll mark this open here as the order block. There we go. And like I said, I'll look to target this imbalance right here, as well as, well, we do have this daily wick consequent encroachment, so maybe that'll come into play if we get some volume here. But yeah, so I'll mark this high here as a high probability target. And now let's take a look at the lunch hour, what happened there. So during the lunch hour, we basically had a push higher, then we consolidated lower, and basically taking a bunch of lows and then spiking higher. So we do have a lunch hour low right here. So look back from 12 to 130. So here to here. Where's the low? We have one here and we have the high. So let's see. I wouldn't really want us to come down and take the low since we did have equal lows here and we smashed through it and got a little, if you were like a master at ICT concepts or SMC concepts, you could have definitely traded during the lunch hour here and targeted this high for a little scalp. So we could have taken this trade and it would have been a sweet trade. Even if there was an SMT here, let's see. Okay, so it's here. Yep, this is a beautiful, beautiful trade. This is something that is textbook A+ setup. SMT, change in state, body close above, even better. Equal lows taken out. Let's see if there's a fair value gap here. Fair value gap tapped right here. I'm gonna get rid of all this later because there else is gonna be too much, but I'll just explain this really quick. 5-minute fair value gap filled. Boom. SMT, equal lows taken out, change in state of delivery. Overall bullish structure. Nothing really here that we want to target. Yes, we did have equal lows, but we displaced away from it. So the market's telling us that we're no longer interested in these lows to then go higher. So we ended up formulating lows here, took out that sell side because they most likely, these people trailed their stops up here. And in this, we also had orders that needed to get filled. So we took out the lows, filled these orders. And then, well, targets are this high for about a 3 RR. And then you should be done. Super easy trade. That is a textbook trade. So definitely like study this little setup here. Super, super clean. So yeah, let's so I wouldn't really want to like see this low get targeted I would like to see this high here get somewhat targeted and see if we get like a setup towards that high. So let's play the market here. Play it a bit slower so I can actually narrate what's going on. So we're coming down into the order block. Let's see if the order block mean threshold wants to hold. Didn't even come to it. Came back above. Let's see if we can hold this area now. See if we can get bob back up here to get at least the lunch high. Bodies are holding quite nicely. Let's get the change in state. Do we get a retracement? Okay, we just pumped right through it. When you guys, let me just pause it really quick. When you guys see something like this, when the body's holding like exactly like right on point to the T, then that's like an algorithmic like sign that price wants to absolutely take off, or you're on the right side, stuff like that. So as you can see, like right, like here for example, and just like right here, holds to the T, holds to the T here, we take off, holds to the T, take off. Like it's like here as well, take off, and we had the SMT. So if you add these confluences together, you'll get high probability trades. And now let's go to the 5 minute and the 50. Let's go with the 50 minute first. So yeah, we just smashed this high. We have a high right here right away. So let's see if we get another push a little higher and see if we get some sort of retracement before we go for this high. So let's see if there's like a trade that we'll get. Yeah, because right now I'm expecting us to maybe like come a little bit higher for this high. It's possible we don't, but I think that's enough. Yep, so we took out that high. Let's see if, so we took out sell side here. Let's see on the higher time frame. So 5 minute fair value gap right here. And we have a 1 minute. See if we could get some sort of bullish structure off that. And we have a 1 minute fair value gap here. Let's see if, so we have an SMT too. So you could take a small short. This is a decent setup. The only thing is that we are so like in premium. So if you want to mark out, like we have a displacement like here, and the high that we're targeting, a high probability target, we aren't really in the discount area. So buying here isn't super high probability, but you can if you want. So the trade would look something like this. We have an SMT, not bad. Let's see if we could spot a first target. So you could target like this high. Right here you could target the bodies. And well, I can't go on a lower time frame. Let's see if I could look that back. Let's see if I could look that back far. So let's target this. So 21,492 to fill that gap. 21,492, something like this. So first target there, and then well the bodies, so around like here, but ultimately target that high. Let's see if this trade will play out. To be honest, I don't even know if it's gonna play out because this is the first time I see this price action too. So I have no idea what's gonna happen, to be honest. So we came back down. Let's see if, okay, if the US 500 took out this low, then that would be insanely high probability. So there'd be a double SMT and then a nice reaction on the US 100. So let's see if we could hold this fair value up here that we just formed. I'll narrate that right now because it might become a bounce point. So yeah, we just absolutely skyrocketed off that. And I think that would have been the first take profit. around, let me check. So it was 4492. So yeah, just about 492. There you go. I don't know if I would have gotten filled there, but I probably would have just snagged the order there because it got so close. So I probably would have just snagged it myself because it has to go a bit past 49.2 to fill the order. So, but let's see what happens here. What time is it? It's 3:19. Okay, so we would have got filled on both positions. So the position here and the take profit here. And we have one left. I would put my stop loss. Let me check really quick. Yeah, so below here because we have an SMT. So stop loss would be right here. And I would have been stopped out at 340. Let's see if it would have played out here. Yeah, it would have played out, but it's at around 4 o'clock. There is very sporadic price action taking out multiple sides of liquidity, so you could expect it to be quite hard to hold on to trades, but sometimes it happens. But as you can see, the reason why we did propel higher is because look how we held this for rally up, right? This I think it's 15 minute. Okay, it's a 5 minute. So yeah, look how we held that 5 minute fair value gap. We absolutely held it to the T, and then we absolutely flew higher. So that's what you guys have to pay attention to, is how we hold the fair value gap so precisely. When that happens, not only for the fair value gaps, but other PD rays as well. Like when that happens, you will see price absolutely fly and propel into areas of liquidity. Also, like if you see it hold, like pretend like this was holding, right, and there was no like high probability like liquidity, then it's reasonable to expect that, you know, I'm not like confident that it's gonna propel higher or whatever. There has to be a high probability liquidity zone or some sort of target for price. If there's none, then there's nothing really to play it based off of that. There's gonna be a big move that's gonna happen. There's no proof there, so don't expect it. But yeah, so that's pretty much it for this video. I could go over quickly because it's kind of getting long here. So, but I could go over quickly, like Tuesday how it plays out, like how you would expect it, and Wednesday. But I'll go over it briefly. But yeah, so let's play it here. So you could expect a bit of bearish momentum now since the day did close off, and the new day is coming up, so we could expect some retracement and some sort of push higher because we're still bullish, right, guys? So we do have a fair value gap here. You want to pay attention to that. Do we come below it? Do we hold it? What do we do to it, right? So right now we came below it, held it, and also there's a fair value gap in here. So then we traded lower, taking out this low, and also coming back into this fair value gap. So let's see if we can break back above this fair value gap, or do we want to keep holding it as resistance? Right now we're just chopping around. It's 230, so you could expect a choppy. So right now it's 230, so we got a lot of displacement, and came below this fair value gap. Now going back into this old high, which you could take off. You don't really need any of this. Go on a higher time frame just to see where we're at. Yeah, there's really nothing down here to like want to target, except for these lows here. So if we come like below, let's say, yeah, right now it's just not high probability. If we just continue to keep making like holding PD rays here, bearish PD rays, lower, then we could definitely see this get targeted. But let's see here what happens. Yeah, we just break above these bearish PD rays, so they become bullish ones, and also this reclaimed bullish value gap becomes support, as you can see, to the T. And what could we target? We have this high here. So let's see if we could target that. There we go. But we had to come back down to the consequent encroachment again for some reason. Just it's just how it is, because well, it's outside of the London high volume time zone, I guess you could say, the time frame that you would want to trade on. So you could expect like choppier price action, and price action you just wouldn't want to trade and put your money on. So yeah, and so we keep going a bit here. I'll go on a higher time frame because this is gonna take way too long. So yeah, we trade lower pretty much during the London session, which you could expect on bullish days, and we trade higher on Wednesday. Sorry, Tuesday. So yeah, we trade higher on Tuesday, and that's what I'm telling you guys, right? So during the London session, you trade lower. Expansion during the higher volume sessions, which is the New York session, and then at the end of New York session, you could expect a close lower, so a little like trade lower to take out all the long holders, right? So if you didn't take profits in this fair value gap, you most likely got it stopped out because you came back to this fair value gap and filled more orders here. So if you didn't take out this take off your order at this premium PD rate, so if you didn't take off orders at this premium PD rate, then you most likely got taken out of the market right here, consequent encroachment, and snatched lower between these two of these equal lows here and this fair value gap. So that's what you're going to want to keep in mind. Keep playing it here. Yeah, nothing's gonna happen here, but London session, let's see if we can snag these lows. Okay, we just come higher. Let's see if we take this high and come lower. So for the New York session, we come snag these lows. There we go. Now this is just choppiness. We took both sides, so this is something you just wouldn't want to trade. As soon as you see this, boom, take out the highs, and then come for the lows here. This is just get off the markets. It's not worth it. Or you could just watch it and backtest your strategy or whatever. Just learn from where you could have lost or could have won, but just don't trade. Don't put your money up. It's not worth it. So let's see. We almost took out the high Thursday during the London session. Let's see if we come during the day session. So the New York Open. So we had news here, and it absolutely took it out. And then again, we did have a move lower, taking out this sell side, and you could target the news high. See quickly, let's see if there is a setup. So news high is right here. Open is right here. Trade lower, sell side taken. Change in states up here. Go on a 5 minutes candles, 5 minute fair value gap right here. See that hold. Change in state right here again. So models in models. Change in state here and here. Fair value gap here. Entry. Stop loss, because this is such a big stop loss. You don't have to put it there, and because the targets are so close, like this is not something that I would be willing to take. What you could do is put it under either this candlestick or this body here, since it's still under the 5 minute fair value gap. So it's pretty high probability that we won't touch it. If we do touch it, then you're most likely wrong. So you're still on the good side here. So yeah, let's keep playing that. Thursday lunch, we come down, take this liquidity, then we take these equal lows out. Four-hour holding here with a with a order block here that looks like it's holding so far. Changing the state right here. So as soon as we date this, I want to see a little retracement down into this wick and daily wick consequent encouragement to then target this high. Actually, we'll stay on the hourly just so you guys see that. See if we get a retracement. Not really. See if we get it below this low and then snatch this high. That's what I'd like to see. Depends what time it is. Okay, looks like we'll get it during the London session. So London session, literally all it did was just trade up, and then during the New York, it literally took the high. So no retracement back down to this. And so okay, we'll cut all that. That was late Monday, like that. Yeah, so this was the whole week. And yeah, hopefully you guys got a good understanding of how I look at every session and how I formulate my bias with the PD raise I want to see hold and the targets. It's fairly simple, guys. Just keep practicing yourself. You guys know the PD raise now. You guys know the targets, high probability times that trade in. You guys know now the lunch hours. So it's 12 to 1:30. So you guys could target those lows and highs. So yeah, definitely back test this stuff. Like I said, you guys know the PD raise, so you know how to set this stuff up. You target PD raise, you bounce off a PD raise, you target highs and lows. If you target the lows and then you could target the highs, you target the highs and then you could target the lows. So there's a bunch of different things here that you could do to formulate a bias. I gave you guys all the tools. I gave you guys the weekly bias, and now I gave you guys the daily bias. So definitely look into that and definitely back test this so you become good at it. So when you start trading with real money, well, first start trading with demo money and bring this bias stuff into your demo trading. So then you could formulate your bias in that and practice, and then bring it to real money. Right, guys? So in the next video, I'm going to be going over taking profits, exits, trailing stops, and entries. So I'll show you guys setups, where I enter, taking profits, trailing stops, and where I would get out of a trade if I'm wrong. Right, guys? Yeah, cut that right, guys, out. But yeah, so next video is going to be a quite important one, especially if you want to manage a trade properly. So yeah, definitely stay in tune for that one, and I'll catch you guys in the next one. Peace.